Everybody thinks that inflation is the enemy. Inflation is one of the most backward-looking economic indicators, and really the inflation now was baked in the cake 18 months ago. So my job in global macro analysis is to look forward 18 months and say, what will the world look like? Just the rate of change comparison of price changes is likely to lead to very low inflation numbers. And housing and wages are always the longest lags. So over the next 6 months, we'll start to see them roll over too. So my guess is if we were to have this call in a year's time, inflation is closer to 2% than it is to 9%, which is a shocking turnaround in events. I think inflation goes negative.
Hey guys, welcome back to the channel. Today we have Raoul giving his take on the changes in the economy and what we can expect for the rest of the year. Powell says that people in the market believe that everything is cyclical, meaning that everything in the system defaults to what came before. He says that we're now in an exponential trend which no one is prepared for or even knows about. People need to understand that everything in the market in an exponential trend environment becomes better. Powell states that in an exponential movement, every burst significantly increases, just as Bitcoin is doing now. Let's listen to Raoul as he gives his strategy for the current market, as well as the massive opportunity that exists even in today's economy. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
But then I look at the oil price come down from $120 to, where are we now, about $80. We've seen stuff like steel down 70%, lumber down 70%. Almost all commodities have come down. So those supply shocks have gone. The other supply shocks you used to be able to see in shipping prices and stuff like that. Well, shipping prices have come down. So almost all the forward-looking indicators of inflation are coming down. So now the market's fixated on wages and rents. Well, the house prices are coming down. We're already seeing that. Demand for housing has collapsed. And housing and wages are always the longest lags. So over the next 6 months, we'll start to see them roll over too. So my guess is if we were to have this call in a year's time, inflation is closer to 2% than it is to 9%, which is a shocking turnaround in events. I think inflation goes negative. So if I'm right that growth is imploding and inflation is about to evaporate, then the probability of the central banks coming in yet again to try and support growth goes up exponentially. Let's assume I'm wrong then. The flip side of this is let's assume that the moment that there's any sort of recovery anywhere, that oil prices go up because there's a supply issue in the oil markets and some of the commodity markets like copper. Yes, that's possible, but you have to have really high oil prices to have the same amount of inflation. So could inflation be sticky at around 4 or 5%? That's where the market is talking about it on Twitter loudly, all the economists. But I'm looking at the 5-year break-even inflation rate, where inflation rate is expected by actual market participants in 5 years' time, and it's currently at 2.2%. 1 year break-even inflation is 1.75. So the market's actually pricing in something very different than the narrative. I think it's setting us up for actually a big shock compared to what people think, because we've been told inflation, 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 that's the fear. I think the next round is falling inflation, falling growth, rising unemployment. People always anchor on the past, right? There's a heuristic bias within macroeconomic forecasting, and generally it's to do with what is your big bogeyman? What is your fear? Right? So everybody who's seen central bank printing, the excessive use of interest rates, who are slightly older, so particularly the baby boomer generation, their big fear is the 70s, right? Anybody who's in their 30s has never seen anything but low interest rates. Yeah. So there's an argument over who's right, because these baby boomers have been saying, we want to prove that we're right, that this was the wrong move. And they anchor on the 1970s, saying inflation came down after the oil shock of 74 and then went back up. However, this time around, we're missing those baby boomers we started this story with, who turned 30. That we don't have that more. We've got the largest number of retirees in all recorded history. And countries like Japan, Switzerland, Italy, Spain have shown us what that means. It means they stop consuming. I remember when my father retired, You know, he was in a good earning job and he had a reasonable amount of savings for his retirement. The moment he retired, you're faced with one thing is, how long am I going to live for? How long is my wife going to live for? And do I therefore have enough money? And so what you do is stop spending. I mean, he must have reduced his spending in the first 3 years of retirement by 60, 70% because of this fear, because nobody wants to be 80 years old and be destitute. So you become naturally incredibly cautious, which is a huge drag on growth.
Powell believes that it's essential for everyone to become proficient in what technology investors have mastered long ago. People must be comfortable and skilled at buying into sell-offs. Powell notes that if everything in the economy immediately becomes solved, it will still be too late for many people. This is because they lack the conviction to seize an amazing once-in-a-lifetime opportunity that would have yielded a massive payoff.
What I had realized is demographics are pretty much everything. Most people don't really think about it. But what happened back in the 70s when we had this last burst of inflation that's pretty famous that everybody now wants to be Paul Volcker, that was driven by something unique, which was the highest number of 30-year-olds ever coming into the workforce. You know, that period of time was the baby boomers. There were 76 million of them. It was the largest demographic in all recorded history. And they all came into the consumption force at the same time. They got jobs, they got married, they had kids, they bought cars, they bought a suit, they bought a house, they bought a table, they bought a chair, bought everything. So we had this massive demand shock. But the other issue is they all came into the workforce at the same time and competed with each other for jobs. And then as we got into the 80s, they realized that their wages weren't going up as much as they expected. The American dream wasn't playing out. And Margaret Thatcher and Ronald Reagan started introducing the ability to get debt. So it became hire purchase for a car and then mortgages and everything became more and more available. So they topped up their income with debt. That was okay, but they then started to also invest in the stock market in their kind of late 30s when they got further into their career, creating this big stock market bubble that went on into the 90s. In the 90s, something else happened, which was again, that constrained these guys. So not only were they competing with each other for jobs, but suddenly in 1996 onwards, the NAFTA, North American Free Trade Organization, and the WTO happened. Eventually, China comes into the labor force, into the global labor force in around 2000. So now the average American worker is competing with a Chinese worker who's earning 1/15 of their wages.
Powell says that his primary cryptocurrencies are Ethereum and Solana, but he also maintains an equally weighted basket as a hedge against a hard hit. He also created an asset management company to assist him in finding the best investment. Powell doesn't believe that crypto regulation will be a big risk to the market because there has already been a giant deleveraging. He sees that this has been the shortest period of time where wealth has been collected in such large quantities. The only issue is people lacking conviction to hold on to their investments in time to claim a massive risk reward. What do you guys think about Raoul Pal's current market strategy? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.